It's Thursday, November 6th, and here's everything you may have missed in business and finance yesterday. After a rough Tuesday, yesterday was a welcome reprieve. Stocks opened strong but lost steam by late afternoon. Still, it was a broad rally, and all three indices ended in the green. In terms of sectors, semiconductors, airlines, regional banks, machinery, and even casinos saw gains. Small caps and retails also had a good day. On the flip side, software, insurance, railroads, and consumer staples lagged. In the background, treasuries softened, yields rose about 5 to 7 basis points, and the yield curve steepened. Gold ticked up 0.8%, Bitcoin rebounded 3.2% after Tuesday's drop, and oil slipped 1.6%, dipping below $60 a barrel. Investors are still wrestling with concerns about high valuations, tech-heavy indices, and whether AI spending will actually pay off. But the buy-the-dip mindset is alive and well, especially with retail investors stepping in. Seasonal trends and corporate stock buybacks are also helping keep spirits up. It was a busier day for economic data. On the jobs front, ADP's private payrolls report came in stronger than expected, easing some worries about layoffs. ADP reported 42,000 new private sector jobs in October. However, this morning, we got a report by Challenger Gray & Christmas that said U.S.-based employers cut more than 150,000 jobs in October, marking the biggest reduction for the month in more than 20 years as industries adopt AI-driven changes and intensify cost cutting. The ISM Services Index came out yesterday and saw a jump to 52.4, an 8-month high, driven by strong new orders, signaling solid economic momentum, but prices paid also hit a 3-year high. The Supreme Court showed some skepticism yesterday as arguments began to determine the legality of some of President Trump's recent tariffs. Any ruling is likely months away, but if the White House loses, they will lose all the tariff revenue already collected and have to find a different way to accomplish Trump's trade goals. U.S. Transportation Secretary Sean Duffy said on Wednesday that he would order a 10% cut in flights at 40 major U.S. airports, citing air traffic control safety concerns as the government shutdown hit a record 36th day. Some earning highlights, nearly 80% of S&P 500 companies have reported earnings for this go-around. Growth is clocking in at nearly 12.5%, way above the 7.9% expected. Over 82% of companies beat estimates, but reactions suggest that investors are setting a high bar. Big winners yesterday included AMD, McDonald's, Amgen, and Rivian, which popped over 23% thanks to a 78% increase in revenue. On the downside, Emerson and Pinterest stock sank, as well as Supermicro Computer, which dropped 11.52% after the AI server maker missed Wall Street expectations on both the top and bottom lines. Outside earnings, Apple announced it may team up with Google's Gemini to power Siri. Thank goodness for that, because right now, all I trust Siri to do is start a timer. Today, we'll have another full day of earnings reports. Also, Fed officials are lining up to speak today, so keep an eye out for comments from Williams, Barr, Waller, and others.